Well, welcome back to Krown's Kiddo Case. Nice little Sunday morning over here from Chicago, Illinois. Very bright and sunny outside actually right now. Unfortunately, though, it's fucking 52 degrees, which is perfect for me, but for the warm, loving people out there, perhaps not so much. Anyways, we got plenty to talk about today, and actually I really do mean that today because realistically, we are seeing continuation from the trade idea that we spoke about yesterday, so I want to follow up on that. I want to show some trades, want to show some long-term analysis, and talk about how I'm going to be managing this trade, because this one's getting a little bit more exciting the more and more that we kind of slide down right now. So without further ado, I do want to wish you the best of the best, also the happiest of the happiest as well. Another coffee-less morning for myself, but actually feeling pretty damn good. Anyways, let's get in the live scene right here, right now. Pressing that button. And there she is, Bitcoin on the daily. Bitcoin slumping back down, and we can see that, once again, the red 10 symbol just harassing price action like the mean bully that it is. Well, unfortunately for Bitcoin, headed back down to the low side of our range, right around that $7,900 target that we spoke about yesterday. And to follow up on my live trade that I showed yesterday, I still had that one running. I did close a small amount of it, about a fourth of it, with options, but essentially what I'm looking at right here is, and what I want to show now is how I don't trade breakouts, but I can sometimes get into breakouts, if that makes sense. So remember, yesterday I took this position, and I've been working this position for the last like two to 2.5 days, I'd imagine, going all the way down from about 8,400, then doing it again at 8,300, now 8,200, I believe is my average price on this one on these December futures. Yes, it is. So again, it's not necessarily completely accurate to what my original entry would have been, because it averages it out over time, because I never fully took off the position, obviously. But again, that's more of an ego type thing, just to like show a better entry, right? At the end of the day, the P&L is the same. Let's go into it now, though, because remember, I was, I got in this, I added that last bit of the position somewhere right around here. On this little lower high right here. And then yesterday we said, hey, as long as we're closing 4-hour dildos below the 21 exponential moving average, or we're just not violating this 8150-ish region on a 4-hour close, I'm going to hold on to this position. And this is how I can get into those support and resistance tests. And then sometimes they do just eventually break out. Now, I'm not necessarily convinced that this one breaks out to the downside, like the big breakout that I'm really looking for, down to like the lower 7,000s, maybe upper 6,000s. Today or tomorrow, or anything like that. I think it's still very much under question, but this is how I would do it, and this is how I typically do it. So now, once this area was once again reconfirmed as just another lower high, well, I hold on to my position, and now once we got that next move down, I can move that sort of triggering area, I suppose you could say, down to this next little pivot point on the lower time frame. So what I can do here is I'll draw on a nice little trend line, just very, very simple. And let me get my shift key ready. There we go. Oh, I guess I already have it in there. I think it's the same one that I used. It is the same one that I used yesterday, right around 80, 70-ish region. So as long as we're closing, 2-hour, 4-hour dildos below this region right here, I'll hold on to this position. Like I said, I did take out a little bit of profit in this region right here by selling some puts against it. And just to show that, I do believe I sold them for probably like 200 or 300 bucks. Yeah, look, it looks like they're trading for about 300 bucks right now. I probably sold them for like 250. Yeah, it looks like something like that. And it's only 5 contracts, so I'm still holding on to the bulk of my position, because remember, this is about a 19 contract short right there. Not 19 contract, but 19 Bitcoin short right there. So realistically, it's now more like 14 is my open exposure, as long as we're below 8,000, of course. If we go back above 8,000, well, those puts don't really help all that much. You still get the premium, but it's not the same thing. Not necessarily what I'm going for. So this is what I mean by I'm always happy to take off a little bit, a little bit off when we approach support or resistance, depending upon where I kind of entered from. And what I'll do now is I'll basically just hold on to this position. If we get back above this region right here, I will close the rest of it manually. If we break this area right here, I just let it run. And I'd be looking for a more immediate test down here to our prior low, somewhere around 7,700, wherever the daily 377 exponential moving average is. Let's see, where is it coming in right now? Yeah, it's still in the same place, about 7,750 to about 7,800. Actually, more so 7,800 right now. So I would probably sell some more puts against it, somewhere right around there. And just off the top of my head, if we were to hit that today, you could probably sell them for like 400 bucks, which is pretty damn good. That's the same thing as buying against your short position at 7,600, right? So I mean, that position that I started at, like, really realistically like 8,400. Now we're talking about $800, an $800 trade on price action, and I think just even what I'm showing right now, which remember I've closed some along the way, is 0.6 Bitcoin profit. So not bad, quite happy with that, especially when Bitcoin's been, more or less rangy and not all that, sexy. But this is the bread and butter of my game. Supporting resistance trader, very, very simple stuff, but it gets the fucking job done. And more importantly, it takes a lot of patience. It's not that sexy, but again, it's kept me in the game, so that's really all I care about at the end of the day, man. Everyone's trying to do this the backwards somersault 360 double flip, and perhaps doing a little bit more calculations than I need to, and in some cases like that. Well, at the end of the day, man, you can make trading quite easy for yourself. I mean, shit, even this is too complicated. I mean, fuck, people who just trade straight up trend would be laughing at me right now saying, Krown, what the fuck are you doing? Just look at lower highs and lower lows. And I would agree. I would agree. You can make it that simple. It takes more patience, though, and that's why most people don't do it. So again, don't be swindled by the by the super like flashy type stuff. Yes, I'll show some stuff today, of course, but that's more so just for general analysis. Remember, analysis, being an analyst and being a trader are two completely different things. And for myself, I focus on being a trader. That's how I generate my living, right? I wasn't doing like YouTube when I first was trading, right? I had a profession before this. So analyst is, you can be a great analyst but a terrible trader because it's just different. It's a different mentality, and vice versa for that as well. Although I would argue that it's probably better to be a trader, because if you're just a good analyst and you're kind of reliant, I would imagine, on other people, right? As I'd imagine, like, your job is to like give out the analysis. Well, at the end of the day, man, I'm a trader first and analyst second. So this is basically how I roll with it. Anyways, as we can see right here, on the daily, both the short-term range and the interim range are both the same. We're still looking at the same thing right here. 377 exponential average to the downside at about 7,800. We'll call it. Is where I'm looking for to kind of initiate the next leg. If we do break that, I will look for the next major leg to the downside, which looking at our descending triangle right here is still pointed this measure move all the way down towards about 6,800. And then, of course, when we're looking at the lower time frames right here, we are kind of working on a descending triangle right now. It's not super set in stone or anything like that, but it does work, and you can kind of see it forming a base support somewhere in this like 7,850 to 7,900 region right here. And the measure move off this ascending triangle on the lower time frames, once again, as we looked at yesterday, is pointed right here down around $7,000. It looks like. And again, these things are not super exact. It's just to get you in the ballpark realistically, and you only need to get in the ballpark when we're talking about about $1,000 move, right? Not only that, but what also is interesting to me about this is that this structure right here. Remember this 3-month consolidation that we put in on a descending triangle or symmetrical triangle. No matter which way no matter which way that you cut it, the measure move is the same, and it's pointed, still coming down here. Was also a break on that descending triangle. Like the actionable breakdown of it was a 382 Fibonacci retracement right here, which was 9,400-ish region. Well, typically speaking, if you're going to be consolidating between the 0.5 and the 382, and you're going to break bearishly in this case, then the bot in algo target is going to be selling the 382 and then likely buying the 236. So I do believe that there's likely going to be a pretty damn big bounce somewhere right around here. But assuming that Bitcoin does get down around there, which again, until we actually take out this region right here, I will not target a move down here. But if that were to happen, that would really make all these major move averages start to pile up, resistances probably in the low 8,000s. So any sort of a bounce below 8,000. And I would just look at that as likely to get continuation, more continuation. But that's well and far away. We're getting way ahead of ourselves right now. What I want to talk about right now is something that I've alluded to a few times, but I want to do a little bit more of a deep dive on it today. So this is very important. This is one of the things that is making me really consider that the downside is. I want to choose my words carefully here because I don't want to induce FOMO, and I also don't want to induce hopium, but I do want to be accurate in my own thoughts. And what I'm going to show right here is bad. Well, I'll just show you the data, and then you make the decision for yourself. I would say I'm not necessarily the most thrilled with this as someone who believes in Bitcoin, as someone who wants to see Bitcoin roll. Anyways, we'll bring up the indicators right here. This is a 3-day dollar time frame, and I'm looking at the DMI. I very rarely bring this up on stream. I used to bring it up a lot, but the DMI ADX is very, very similar to the RSI. I think the RSI is a little bit more crude, or maybe it's not more crude, but it's not as in depth as the DMX as the DMI. but they kind of tell you that around the same things. Anyways, now I'll kind of show why the value of the DMI is the value of the DMI, especially for those people in the program who have access to this indicator right here, which is pretty, you know, which is just with a few different inputs really. Anyways, going into the DMI right here, this is a 3-day, and the DMI minus has become dominant, and we've not only become dominant, but we see that the ADX is strengthening as well. It's gotten solid once again. So this to me is very, 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 very important, because we've only seen the DMI minus get dominant on the on the 3-day total time frame only when Bitcoin is going through prolonged down markets. The last time that we were dominant on the DMI minus was basically all of 2018. You can see that it stayed well above the signal line right here for pretty much the whole time. Let me make sure that I'm on the run. I guess we can. Oh yeah, we can get some more price action history. Okay, great. And then the times before that we were dominant. Oh, sorry. Let me also explain though. When the DMI minus is dominant, that's pretty good, but it doesn't get the job done. What I also want to see is the ADX strengthening as well, which when it flashes solid, that's strengthening. So right now we're quite literally strengthening. Before, you can see that it's kind of more grayed out, and for the colorblind people out there, this was grayed out right here. It's weakening essentially. So we're talking about the bull trend right here, weakening. It actually got the top pretty damn well. Not perfectly, but pretty damn well. Anyways, it's more about momentum on this one, and again, when we see that signature with the DMI initially getting dominant and the ADX getting strengthening at the same fucking time, that's typically when we do see these pretty nasty sell-offs. Actually, the last time that we saw we saw the DMI minus dominant during the whole 2018, but we didn't see the DMI minus dominant plus the ADX coming from this same area right here and strengthening until we actually really broke down in, what was it, like October, November area right here. Not only that, but going back down a little bit further, we can see that the DMI minus is just very rarely dominant during any of these, any of these past prior runs. It's only during the it's really only during the bear markets when we actually do have DMI minus dominant plus the ADX strengthening, and that's also a signature that you see during 2014, 2015. I'm trying to zero in on it. I feel like this can be a little bit lost in translation, but I'm trying to zero in on this part right here, right around 31st of January 2014, and that was basically the highs over last, if the last parabolic market cycle, or sorry, 2 parabolic market cycles ago, I suppose. And then we saw it take over right here in about August 14, before Bitcoin just absolutely fucking plummeted 75% right there. Not necessarily suggesting that Bitcoin's about to plummet 75%, but the time before the time after that we saw a similar signature was this guy right here. This one produced a 50.5% drawdown, down move. And we saw this guy right here. This was also another decent signal, coming all the way down for about a 40% drop. Again, these are pretty fucking massive, to be fair. And I think that goes, yeah, I think that gets all the historical ones. That pretty much gets it. So again, this does have a pretty damn high degree of, well, I won't say it. I'll let you make the call off that one. But that certainly does make me a little bit apprehensive here. Again, I've been bearish ever since we lost 10,300, but this is making me think that this could take a while. It certainly could take a while. We do see 3-day RSI getting very comfortable in the bearish control zone. No divergence is going to be made here at all whatsoever anytime soon. 3-day jewel, basically got it fucking perfectly. And I don't say that to just prop up the jewel, but the jewel does that enough itself. It got the high at late June, it looks like, right here, on about this $12,500 tick. Then it got a damn good sell signal right here at about 11,000, and then a continuation or hodl signal for your shorts right here at about 10.3. That was when I started to turn bearish, and well, this continuation is what I was really not happy about. I suppose the good news is that very rarely in Bitcoin's history have we ever seen the 3-day jewel get the light blue oscillator into the critical zone right here below the 20 marker. And when we have seen that, that's actually been major market cycle lows. Actually, in fact, our last market cycle low in early December and back here in January 2015. So pretty damn good. But again, that would imply that we do have some more downside here to go. And how much could that hurt price action? Again, I do think that $7,000, not only lining up with the $7,000 is kind of a major point of interest because it not only lines up with the measure move off the descending triangle symmetric triangle right here, it's also a lot of major movement averages. So you do see the 3-day 200 simple and 200 exponential moving average actually having a nice cross right here, which likely does get tested, and that's right around 7,100. So again, it's kind of like a zone between, like, let's say 69 and 7,100, and you never know where these stray wicks go. Not only that, but the weekly 89 exponential moving average is shown right here, right a little bit below there at 70-50ish region. If we do go to the monthly, more importantly, the monthly is where it really starts to shape up, because the monthly is extremely important for long-term direction. And we do see the yellow 21 exponential moving average coming in here, and we also do see the red 10 simple actually cross the upside of it, which is good, which is actually bullish. The last time we saw this cross was back in 2016 right here at about $350 before Bitcoin went to $20,000 a few years later. But the thing is like, just like 2016, you typically do test these crosses. Where is cross happening around? Below $7,000. Not only that, let's take it one step further. Let's put on the Challenger bands right here. With the advent of last month's price action, this breaking the structure right here, before September, we could have been bullish, and I was bullish before then. Even though you could certainly give me some shit for that, absolutely. But I'll always go with the former trend until we get a change of behavior. It wasn't until the last week of September where we got a change of behavior. To be fair, at least in the way that I define it. The problem with that is that it did confirm this as a local high, also a lower high, and also rejection off the top Challenger band. If we're going to be doing that, typically what's most likely to happen is we do come down and test around the 27 moving average, and that's actually this silverish moving average right here, which is coming in where? Right around fucking 7,000 alongside all these other major moving averages in this region. And my general rule for markets, especially in traditional markets, which is where I come from, is that as long as you're above, on a monthly time scale, if you're above the 21 exponential moving average, you're generally bullish. If you're below it, you're generally bearish. So I could say that as long as Bitcoin's above 7,000, we could say that the macro is still okay, I suppose. But I do feel like I might be feeding into some hopium here, because you never know when you might get something that looks like perhaps this right here. This is Mrs. Litecoin, who did something a little bit similar. Didn't get that rejection off the off the top side here, off the top Challenger band, but did just smash through the 21, and it's currently based on the 55, which for Bitcoin, that would be all the way down here, a little bit sub 5,000, actually about 4,800 it looks like. So that, if Bitcoin does shatter the $7,000 level, I actually don't think, I think it's actually quite unlikely that we stop in the 6,000s. We didn't stop there on the way up. We very unlikely stop there on the way down. I do think that we'd make our way into the low 5,000s or upper 4,000s, very, very likely, if we do lose this level. So I do think that $7,000 is critical, and yeah, I do think that we get a bounce around there, and I really hope that it's reversal. Just as someone who believes in Bitcoin, again, as a trader, we shouldn't care about direction. It's a little bit sacrilege, I suppose. Okay, cool. So we spoke about that. Let's get these Challenger bands off. Actually, I'm curious what the Challenger bands are showing on on a little bit lower of a time frame. Let's see what a 3-day shows. 3 days kind of based off the bottom one right now. So it's like, do we have enough power to trend from here? I'm not so convinced. Again, my sort of criteria for looking for the next leg to the downside is still the same. I need to see a daily total close below 7,800 or a 4-hour below like 7,850, 7,900. That would probably do it for me. But the 3 days kind of being cradle right here, and it's typically not the best time to be a seller if that's if you're looking for like the immediate trade. So I'm not necessarily convinced that we're gonna break it like today. 2-day, you can see that we have all these bottoming wicks right around 7,700 on the 200 exponential moving average, which would also be coming in right around the bottom side of this Challenger band here. But you can see that this actually looks like it wants to be walked down, which is also not good. Daily, not really telling us anything that we don't already know. Weekly, actually, we're kind of basing off the bottom Challenger band right now, so it's good reason to, I suppose, be looking for a bouncy bounce, I suppose. Anyways, taking off the Challenger bands right there, and going back into the daily, I want to make sure that I got this right, because I forget what I said at the beginning of the stream. But on the daily, if you want to look at it and you want to simplify everything without going to lower time frames, these major moving averages right here are pretty much going to get it. A break below the 377 exponential moving average, and we can look for those downside targets. that'd be pretty damn good. I'd count either a daily total close below 7,800 or a 4-hour close below like 7,850 would probably do it for me to look for that. Although the daily is going to be a lot more, I'd have a lot more confidence in looking at a daily. By the same token, if we were to, get another one of these bull wicks in this region right here and kind of reverse around, the red 10 simple is our most preliminary resistance. That's right around 8,200. And if we did get another bull wick here, I do think that we'd eventually get above it. But technically speaking, I'd want to wait until we get back above 8,200. Imagine that does line up with some on the lower time frames here. In fact, it certainly does. We do see that this pivot comes in right here on that last little lower high. Anyways, going back to the daily, if we were to get back above there, I would look for at the very least another test towards 8,400. This prior little local high right here, and likely it does get a test up to the 200 simple and 200 exponential moving average, which are going to be converging on each other rather rapidly around 8,600 as both as actually the yellow 21 and the 200 exponential and 200 simple all converge on the same area, which is telling us that that's a big focal point on the market now. Also lining up with this kind of nice horizontal trend line right here coming in from our what was it, May breakout, this massive one right here. So a lot of structural things lining up with each other, which is really great for confluence. And that would also mean that if we got back above this region, I could be slightly bullish, I suppose. I wouldn't be bearish. I'd be more neutral than anything, I suppose. But realistically, for me to get full on bullish, I need to see us get back above the 21 exponential moving average on the weekly. That's 9,100. That's our big bad thing from a long-term perspective. That's typically does hold up the bullish, the bullish dumps, if you want to call it that, and stops your bearish pumps, I suppose, during your bear markets. But again, just going back and back testing it, Bitcoin's actually never broken below the 21 exponential moving average during a generally bullish market ever in the history of this asset. Only during bear markets does it do that. Again, this one right here, definitely a bear market when you have an 80% fucking move to the downside. I don't know any sort of, 77%, 77 spot, 12% move to the downside. I don't know any fucking bullish market that, I mean, I just wouldn't call that a bullish market. So fair enough. If someone wants to disagree with me on that, it's okay. We can agree to disagree, I suppose. But again, we are severely below the 21, as it stands right now. And so for me, as long as we're below the 21, I don't really see any reason to get like long-term, medium-term bullish. You might have your bounces here and there. I'm sure that you will. And we've actually had a pretty decent one coming off our current lows anyways. I mean, we went from like 77 to 85, right? That's about a 10%. Yeah, pretty damn good. But until we get back above the 21 exponential moving average on the weekly, it's always going to be a question in the back of my mind that are we, is this just another failed bounce, or are we actually going to start to trend? So that's what I'd be looking for. And again, kind of the order of operations is best seen on the daily, I suppose. Back above the 10 simple, and hey, get on 10. That's right, I took them all off. Let's actually just put on these ones right here. It'll be super easy. Get back above the 10 simple, and I'd be looking for a test up to about 8,400, and then likely does get its continuation up to about 86. Above 86 and all these major moving averages right here, I would be, I could say that I would be short-term bullish. I'd at the very least look for a move up to test 9,100, but above 9,100 is when I become a long-term, like medium long-term bullish once again, like in looking for the moves. So yeah, I probably would take a trade above this region right here, and then I'd add on to it above 9,100 if that happens. So yeah, again, I think that's the least that's the less likely thing to happen, but it's still in the cards right now. As long as we're holding this area right here, more preliminarily speaking, as I can't even say my fucking words. As long as we're holding this area right here. I do think that it's quite, it's still within the realm of possibility. I just don't think that it's very likely. Bitcoin looks kind of sick right now. Let's see how the lower time frame oscillators are shaping up. Do they have momentum to actually break it? We do see, by the way, on 4-hour ADX strengthening right now, and DMI minus is dominant. But I'm going to take it off for now. I said everything that I want to say about it. We do see more importantly, we do see historical volatility percentile extremely low right now, and this is this is where you can get your trending moves from. The last time that we were this low, obviously, well. during this settlement period right here, and again, this fucking price action looks so weak and ugly and disgusting. There's nothing bullish about still creating lower highs. At the end of the day, again, the most simplest of simple trading ways, and well, there you go. Not only that, but do we have some hidden bearish divergence here? No, we don't. 4-hour Jewel has switched around to a bearish posturing, but it's not a signal. 4-hour Stokes still down, kind of hanging around the bottom side there, getting rejected from getting out of the bearish control zone. So bears want to put the pressure on. 3-hour Stokes fresh cross down, again still kind of wedged in the more critical territory. 2-hour Stokes in about the same posturing, and hourly Stokes about they're all kind of in the same posturing. So I do struggle here. Do we have enough momentum to break this? If we do have enough momentum to break this, what you're going to see is the Stokes get stuck between like the 0 and 40 marker, and that's what you're going to want to see. You don't want to see it get out of that 40 marker, otherwise we're probably going to play out a nice bouncy bounce. But you can use your lower time frame Stokes to kind of get the momentum plays on those breakout plays, if that makes sense. Anyways, let's go check out the 12-hour. We spoke about this yesterday. I briefly mentioned it, but it's like one of the biggest things to me, but I briefly mentioned it just for a second. 12-hour Stokes having a fresh cross down, rejecting the bullish control zone. I mean, blindly trading the 12-hour Stokes has been phenomenally profitable the last going all the way back to this run, maybe back all the way here towards April of this year. If you would have blindly traded the Stokes, assuming that you have decent risk management, I shouldn't say this, but you'd have damn good results. Anyways, 12-hour RSI losing the exponential, and again trending below it. We are going to make some divergences here at some point, but it's going to be building there, but it also suggests that we do get some lower lows first. It's still in the process of that. And again, this is got plenty of room right here. This is plenty of room. Not only that, but looking at the daily, daily's actually having a fresh cross to the downside here too. It's not set in stone right now. And of course, we do get a bull wick, coming into end of day. We do get back above 8150-ish maybe. It's probably going to undo that, unravel it. But again, daily RSI getting rejected by the exponential. So it kind of tells me that, yeah, we probably do actually move down here. Again, we will create some divergences off that, but that still we got to come down first, make some lower lows, then confirm a local low, and then we can play some divergences. And daily historical volatility percentile still holding the moving average on it. So I am inclined to say that we are still expanding here. It's just very, very slow. As long as we're above this, I do look at this as expanding as we get, structural break to the downside, and we're still, making lower highs and lower lows the whole way through. So it's quite literally, trending to the downside. So yes, volatility getting it right as well, telling you to stay in the trade essentially. Okay, what else do we want to talk about? Let's talk about derivative. We talked about that. Let's go look at expected moves. Expected moves still squeeze into the downside here. First standard deviation coming in right around a bottom side support. It's exactly what you would expect to see. About 7,800. If we do break below there, I doubt that we'll stop at the second standard deviation. It's very likely that we'll go to the third. And guess where the third is? It's at our bottom side targets, low 7,000s. I believe about 7,200 right now. To the upside, even though I don't think it's that's likely. Top side resistance right around 8,200, and that's our most preliminary resistance. You can see that's just it's not even that strong, but it still rejects price action, which is not a good sign. So yeah. Not really too much else to say about that. Also, what I also want to show is the Bitcoin VWAP ratio. A little bit of a newer thing. I haven't really been shouting it out too much, but let's give it its due diligence right now. So I suppose we should read a little bit about it. The VWAP stands for volume-weighted average price. In effect, VWAP is an alternative method to realize price in determining average price the market paid for their coins, essentially. And what we're looking at here is we're looking at Bitcoin price action right here, and then we're looking at, on this pane, a bunch of different moving averages on the VWAP. So what I'm going to present now is also, I want to first start by saying it is, as of right now, more on the neutral side. But this is what I'd also look for in addition to the 3-day DMI ADX to kind of, signal that next move, I suppose, or at least say that it's sustaining. So we have three big ones right here to be aware of. We have the blue, the dark blue, then we have the purple, the light purple, and the pink, right? And you can see that there's a very specific signature that we see during the market cycles here. When we're in a bullish market cycle, we see all three of them operating above kind of where my cursor is right now, if you were to draw like a regression line right here. And we also see the blue trending on top of the purple, and the purple is trending on top of the pink. So they're all kind of overlaid on top of each other, as you see. I mean, this is your picture perfect example right here. We break out and we get this signature pretty much right as as we're turning the corner in 2016, and that gives momentum all the way up. It's just fucking beautiful. Then during 2018, we get the opposite. We see them converge on each other. Sorry, that's also the other point. When we're in a bull market, we see them diverged, in that structure. When we're in a bear market, we see them converge on each other, and we see the opposite posturing, where we see the blue migrate below the purple migrates below the pink. Right, that's what we see right here, beginning of 2018, and well, the rest is history, right? Then what happens during 2019, beginning of 2019, we see them converge on each other right here. We see them converge on each other quite rapidly. But as you'll notice, now we do see now we see them all converge on each other once again right at the critical this what do I want to refer to this as? Just kind of like the baseline regression essentially. And if we do see, and we already see the pink, we already see, is it the purple or the pink? We see both the purple and the pink actually below that regression, not a death sentence in and of itself, but we see the blues, starting to migrate below as well. And if we start to get divergences between them between them three, as they all migrate as they all migrate lower right here, then that is the signature that we've seen in past prior bear markets. That's what we've seen right here in 2018. That's what we saw right here in 2014, 2015. That's what we saw right here in 2011 as well. So this is concerning because I typically don't, care all that much about something like this, but we're seeing too many confluences around the sphere. Of course, random weird things do happen in the market, but if we see this sustained below this area right here, and especially if we see them, get the same signature that we saw, back on over here and over here, I do think that we're going to come down and probably not hold 7,000. I'll put it that way. Probably not hold 7,000. And if we don't hold 7,000, I do think that Bitcoin finds its way to like low fives, upper fours, most likely. So yeah. Anyways, I'll show competing narrative to that. This is the Bitcoin difficulty ribbon. This speaks to the impact of minor selling pressure on Bitcoin's price action. So what we're looking at here is typically what we've seen in past prior bull markets is we see all the, I believe these are moving averages on this metric kind of diverge away from each other, right? That's when Bitcoin's trending to the upside right here, and right here. And when they converge on each other, that's during your contraction phases. That's during your, bear markets. Well, we are still actually diverging away, as you can see right here. So I am throwing a little bit for a loop, as this has been a pretty damn good indicator, to be fair. But if we were to see this converge on each other, then not gonna be thinking that same thing. So I would keep an eye on it, but that would be that would be a good counterpoint, or at least something for the bulls, I suppose, as I do want to be a little bit more fair and balanced, like Fox News. But let's put back on all these major movement averages right here. Let's go over and check out CMEs. Remember, CMEs closed the week. They closed the week on Friday, and they closed at 82.25. And so they're pretty much trading almost parity with spot right now, even though we're like pretty early in the month, which is kind of showing that we might go into backwardation. So what does that mean? Well, it means that if spot is trading below, if spot is trading below where CME is closed on Friday, then I probably would be looking for another bounce attempt up, but I'd probably be looking for that to get faded. By the same token, if spot is trading above where CME is closed on Friday, I'd probably be looking for actually a bounce buy on there, somewhere around this region right here, on a retest of that. But if we're trading anywhere within this region, we're probably not going to get any sort of like an obvious play. As it stands right now, just looking at CMEs right now, I actually don't hate this. It looks a little bit more bouncy to me than not. Looking at the weekly as well, looks more bouncy to me than not, especially closing back above the 55 and wicking off the 89 right here. But hey, at the end of the day, you have to trade the chart that you are trading, if that makes sense. Anyways, we can go back on over here and check out GBTC. GBTC disagrees a little bit. It closed below the 55 actually, and on the daily we had on the daily it does look like we had a little bit of a bouncy bounce. It looks like it's kind of setting up for a bouncy bounce, maybe back up here towards 10 and a quarter maybe, and that's kind of what CMEs look like as well. So I do still think that there's perhaps a bounce in the cards, but what could also happen, the other scenario is we could also see the flush. We could also see the flush to the downside before CMEs open, and of course before GBTC opens tomorrow morning, and then we'll just have a gap down. At that point, that would be extremely bearish. So if you do see a major gap down, especially below the 377 exponential moving average on the daily right here, which is again about 7,800, that would be massively fucking bearish. So if Bitcoin were to, if CMEs were to open below that region later tonight, I believe at either 5 or 6 p.m. Eastern Standard Time, then that's really fucking bad. Anyways, okay, cool. So we looked at all that. Let's go check out Bitcoin Dominus now. What's a Bitcoin Dominus do? Let me just make sure I am recording. Microphone's working. Oh man, it's a good day. And if we get the Dominus chart up, it'll be an even better day. Yeah, Bitcoin Dominus chart coming back down to that area that we spoke about, 69%. And I do think that, you know, it hasn't broken just yet. And I'm very curious to see that if Bitcoin does break down here, do we see the Dominus chart shatter as well? Or do we see it actually go up? Because typically when Bitcoin shatters, we do actually see altcoins shatter even more, which makes the Dominus chart actually go up once again. And we are still kind of basing on this support right here. So I think it's close. It's very, very close. But if, you know, if we go any lower, and especially if we close anywhere below like 69%, I would be looking for this to come all the way back down to like, you know, 68, 67 and a half, somewhere in this region right here, and also going to get a massive, massive rally. So let's go check them out. But, you know, for all intents and purposes, we're on support right now, so it's a little bit more likely to bounce it, I suppose, which would be slightly bearish for alts. But it doesn't look all that menacing in its current posture. Let's go. Where's my Cardano piece of high technology? We did get that move up to the 55, so I do like that. Target has been met. Do we get continuation all the way up to 520? You know, we obviously are finding resistance right here, but I'd give it the benefit of the doubt. I'd give it the benefit of the doubt. What am momentum also just saying? Yeah, daily Stokes look good. Daily RSI looks good. Daily historic volatility percentile is expanding, and daily Joule actually pretty. You know, it's not a perfect buy signal, but it's continuation for sure. So yeah, you know, I'd have to say that we probably do get back up. So first target's been met, and second target I think is actually kind of likely. So I'd have to say that the Bitcoin Dominus chart probably does break down. Let's go check out a couple more though. I'm just curious if we can see like something that's like an obvious signature. Mr. Buterol, what's he doing right here? Kind of wedging himself into that same ascending triangle that we spoke about yesterday. So yeah, you know, more on the bullish side. Momentum also is pretty much in the same posture and good. Okay overall. What about Mrs. Litecoin? Same thing. Yeah, you know, Mrs. Litecoin I think makes a move up here towards 732 or 7,732. How the fuck do you say that number? It doesn't matter. Somewhere around here. It's the same posture as well. Daily Joule actually okay there. So yeah. Anyways, what else do we want to look at? I think that's it for that. Let's go look at our Buterol versus Spot and Litecoin versus Spot as well. Buterol versus Spot looks ugly as fuck. Wow, disgusting. Get it out of my face. Again, if the weekly is still a rejection of the 10 simple right here. What if we go into the daily? As long as we're below 182, I don't have any reason to be bullish on this. I mean, we do have rising wicks, to be fair. We do have rising wicks. We are kind of operating in a little bit of a rising channel right here. You know, we had this falling pizza right here, breakout to the upside, gets faded before the full measure move was what was met. Then we come back down, create a little bit of a bear flag right here. Technically, the measure move on this bear flag would be pointed all the way down here towards like 130 and 135. I don't know how much I believe in that one. I do think though that this is looking a little more nasty. We're kind of spilling over right now. Let's actually do this exactly right. Let's do this properly for a 4 hour. Yeah, it looks like it is working quite well. Volume in Toronto is proper. Structure is a little bit sloppy, but okay. So yeah, Mr. Bureau looks like he kind of wants to make another run towards 170 low. What about Mrs. Litecoin? What's she doing? 55. Okay, Mrs. Litecoin's really, really easy here. All I'd want to be aware of coming into tonight, which is the weekly close at 8 p.m. Eastern time. Do we close above or below the 200 simple moving average right here, which is $57 about, or 50? Yeah, about a little bit below 57. If we close below, pressure onto the downside, that's going to be our first open and closure below the 200 simple since really like December. And before that, it's actually never had really a chance to. But also, you know, it offers up a pretty damn easy way to trade this. No matter, I'd just be looking at whichever way that we break on this coming week, which again we get later tonight. If we break above the high of this current week at 57 and 82 cents, I'd be looking for a move all the way back up to 62 and a quarter. If we take out the low side of this at 52 spot 75, I'd be looking for a move probably all the way down to like $45 over time. It's not going to look good. So yeah, fair enough. Anyways, I think we spoke about all of that. Let's see. It's already been 38 minutes. Jesus Christ, man. Time is flying right now. I think I'll probably start to leave it off there. Perhaps we can talk about one more thing. This is kind of just stupid that I'm going to mention, but why not? You know, why not? Here's a monthly. There is something interesting about this chart in the most fucking basic of basic ways. We printed 3 red dildos in a row, and we're actually working on the 4th right now. But we've never printed more than 2 consecutive red dildos in a row in a general upwards market. In this market up here, we never went more than 2 red months in a row. In this, you know, in this market to the upside right here, we never went more than 2 months red to the upside as well. This is the first time we've actually seen it. So again, a little bit of indicative of a change of behavior as well. I think I'm going to cut off the video right there. It's probably long enough. Do we want to go a little bit more deep into it? I think that covers up all the relevant things, really. You know, we can talk about the matrix and shit like that, but well, let's actually see where it's coming in around. It's going to be confluent with the weekly 21, wherever that is. Yeah, it's right around here. And again, you know, that's basically my kind of phase for getting, you know, full on bullish once again, if we do get back above it. But this trend line goes all the way back to the genesis of Bitcoin. When Bitcoin's below it, like this area right here and like this area right here, kind of a good time to be an investor or sell on that trend line during your bullish or your bearish pumps. And when we break above this trend line, that's your bull marks right here. And of course, you know, we hold it all the way throughout 2015, 2016, 2017, based on it for literally like multi-years, and then go parabolic once again. Then we break down it in 2018, end of 2018, and that's, you know, that's kind of the same sort of accumulation phase that we saw back on over here in this segment. So I'm being very lackadaisical with it. I'm referring to this trend line right here that I have my cursor on, and as you can see, we broke below that, also in confluence with the breakage of the 21 exponential moving average right here. And for me, that's, you know, that's not good. But that also means if we can get back above it, then good. So overall, we are well below right now. That's all I have to say about that. And I do think that kind of adds up as this being more of a you know, perhaps more of a bull trap, which is actually quite scary to think about. Looks like Bitcoin's coming back down to 7,900 low. Let's see if it's gonna. I'm gonna guess probably gonna test this horizontal right here. But again, I would really wait for full on closure if we're going to actually start trending right here. I'm not so convinced that we have the momentum to break it right now. Anyways, with that, I'll leave you off there. Another 40-minute long video. My God, man. Apologies about that. But hey, what else am I going to fucking do on my Sunday morning? So thanks again for listening. I do want to wish you all this nice Sunday morning. I'll be back on tomorrow with some more live stream analysis. Take care and see you soon.